Welcome. I'm going to cover the most ingenious way to pay off all debt, including your mortgage, that you have ever seen. Today we're going to take you on discovery. This is a Nobel Prize winner, Albert, who said it best. Discovery consists of seeing what everybody has seen and thinking what nobody has thought. Just to illustrate this, I want to ask you real quick, what is it that's between the E and the X in the FedEx logo? Now this thing's been around for a long time. You've seen it, I'm sure, at least typically well over 1,000 times. We've all received packages from it. So again, what is it that's between the E and the X on the FedEx logo? Right, we've seen it. What is it? It's an arrow. We've seen it thousands of times, but until someone pointed it out, you probably didn't recognize that it was there. Will Rogers had a great sense of humor, and he had some incredible insight. This is one of his more famous sayings. He says here, "The problem in America isn't so much what people don't know. The problem is what people think they know that just ain't so." So let's consider the following. You've been a great steward and you've saved up cash to purchase a car, $30,000 in this case. You go to withdraw your $30,000 from the bank, and Mr. Banker says, "Whoa, let me make you an offer. Let's put that $30,000 into a CD and I'll pay you 4% on it." The bank then loans you the $30,000 so you have cash to go pay for your car. That's what you wanted. And it's only going to cost you 6% for the loan against that CD. Is that a good deal for you or a good deal for the banker? When I saw this, I thought 6% for the banker, 4% for me. Yeah, that's probably a pretty good deal for the banker. Well, let's see. Remember what our buddy Will Rogers said, it's not so much what we don't know as what we think we know that just ain't so. So the bank loan is 6%, $30,000, 4 years. You're going to end up spending $704.55 a month in payments for 48 months. Altogether, you're going to spend $33,818.44. That means you paid $3,818.44 in interest. Is there any chance that your 4% CD will be worth more? Let's see. 30,000, 4 years, 4%. Look at this. The ending balance is $35,095.76. That means you made $5,095.76. You actually made $1,277.32 on that transaction. How is that possible? It's very simple. On a CD, it's compounding interest, 4% on 4% on 4% year after year. On the bank loan, every time you make a payment, the balance decreases, and so the calculation of the interest due on the next payment continues to decrease month after month until finally it's paid off. Albert Einstein said, "The eighth wonder of the world should be compounding interest." He also said, "Those who understand interest earn it. Those who don't, pay it." Do you want to earn it or pay it? I personally vote for earning it. So let's help people change that so they can get out of debt, quit paying interest, and get into a place where they can start earning it. The wisest man who ever lived, King Solomon, wrote, "The borrower is servant to the lender." That's in Proverbs 22:7. I think that needs no further explanation. Let's use this scenario. You're going to fly from Kansas City to St. Louis, and you're going to fly at 100 miles an hour, but you have a headwind of 34.5 miles an hour. Now that's not an arbitrary number. 34.5 is the average amount of money that people spend every month on their debts that goes to interest. That trip will take you, with that headwind, it'll take you 3.79 hours to get from Kansas City to St. Louis. Let's look at the neutral, zero debt, zero headwind scenario. So flying at 100 miles an hour, it'll take you 2.48 hours to get to St. Louis. Not bad. You're not bucking a headwind anymore. However, in the financial world, there's a better scenario still yet, and even if you're flying, that we can turn around a tailwind. So, it's the same flight, but now you have a 34.5 mile an hour tailwind. It now arrives in 1.84 hours instead of 3.79. That's roughly in half. So you can see that if you have a tailwind, if you're flying, and if we can get a financial tailwind, you can arrive at your destination much, much quicker. So banking is a process. Basically, it's a pool of money. So people put money in the bank, and what they do is they loan it out. They loan it out through credit cards, mortgages, car payment, car loans, personal loans, anything like that, right? And then those people put money back into this pool through payments. Okay, that's just the banking process. Albert Einstein also said everything should be made as simple as possible, but not simpler. For some reason, we have a tendency to try to make things more complicated. This special banking process that we're going through today is not complex, so don't make it any harder than it needs to be. So here it is. The numbers don't lie. It's a pool of money. Now, in this case, it's your pool of money that you control. Now what happens is you take money out of your pool when the system triggers the event and you pay off a debt. Now instead of writing that check to someone else, you essentially write it to yourself by putting it back into the system to be used again and again and again, creating a tailwind. What's the next step? Simple. We obtain the information about your existing debts, plus a little bit of other information. That's called the intake form. We feed that data into our system, and using some very complex algorithms, it delivers a very simple, step-by-step game plan. Get with the agent that invited you to watch this short video and have them run an analysis to see exactly how well this banking concept can work for you.